Hi everyone, Sam Norris here. Today I've got the privilege of being able to sit down with a good friend of mine, Yogesh Jethani, who is the owner, CEO, what would you say, of Property for Financial Freedom. So I thought we'd kick things off by giving Yogesh a bit of time to introduce himself, talk about his company and what he does. So how did you sort of start this venture, Yogesh?
Yeah, so I've been in property for about 12 to 14 years. I started just after the recession in 2007. I started purchasing a lot of properties using gifted deposits. So basically approaching developers, buying in bulk and getting a good discount.
Yeah. So
I did that for friends and family, and then I built a website, worldwidepropertyinvestment.com, and got Joe public. So it was good for 2 years. I built a good portfolio for a few years.
Yeah.
Then it became more difficult because there was a lot of cash coming in from Asia. The mortgage companies cracked down on gifted deposits.
Yeah, know all about that.
You know about that. I think nowadays they're very strict about the criteria. I think it has to be a family member.
Yeah.
And then I laid low a bit with property, dabbled in commercial. I concentrate on e-commerce business. And about 2 years ago, once they announced Brexit, I thought, there's going to be a bit of uncertainty. This is a good time to strike. I want to have a piece of this. I went to Manchester one weekend to look for properties. I purchased 6 properties one weekend.
Wow.
I put deposits down. And then I kept going back, over the next few months, and I thought, actually, I can make this into a business. So I launched Property for Financial Freedom, and basically we source, we refurbish, we tenant, and we sell properties in the outskirts of Manchester.
Yeah.
The properties are decrepit properties in some cases, very smelly. They need a lot of work on them.
We like smelly properties.
Yeah, you're right. The smellier the better. And that's it. It's just gone from strength to strength. We offer 3 investment opportunities for investors. So we offer armchair investors 8% returns. So they give us the funds. We source, we refurbish, we tenant, and we sell it.
Yep.
And we split. That's one option. The other option is joint ventures. We do exactly the same thing, but we split the profits when we sell. And the third option is the investor just buys a below market value property.
Okay, good. And we're here today to talk about below market value property.
Yeah.
So I suppose for the novice who might not have seen the 3 little letters BMV thrown around, what is a below market value property? How do you know that a property is below market value?
I mean, a lot of people say they bought it with a discount, 5%, 10% from an estate agent. For me, that's not below market value. Yeah. It's very hard to get financing, and just in case there's a downturn in the market, there's no meat on the bone.
Yeah, absolutely.
So below market value, I mean, any property we go for has got to be 25% minimum below market value. That's what we consider below market value.
And you would, and how would you gauge whether the property is actually below market? How do you go about deciding, right, this is 25% because actually the market value for a property like this is X?
Yeah. Rightmove, Zoopla, being in touch with estate agents.
Yeah.
Walking them. Having a good walk around and just actually, checking. Good.
We've had a few questions that have come in from various people on social media and things like that. So we're going to run through a few of those, starting with a good one from AJ Zafar, which is, what steps do you take to source the below market value properties? So is it all online? Is it all through agents? Is it all direct to vendor? What is your first port of call when going out and saying, right, I'm after some new property now? For the first year, it was a lot through estate agents, through insolvency practitioners, through estate agents and solicitors. Okay.
Basically, they know we're serious cash buyers. So before the deal comes to market, they offer it to us. In the last year, it's more difficult. So now I do a lot more going direct to distressed seller. So how do you gain access to a distressed seller? We do a lot of leaflet drops in the outskirts of Manchester, something like this. So basically, we buy houses fast. If you're going through any issues with, probably a bit difficult to see, but if you're going through any issues with repossession, facing repossession, you're going through a divorce, you're moving house, you need the cash quickly, the house has been with the estate agent for a long time, not selling, you don't want to pay the estate agent fees. You know, we're there to kind of help people get out of a problem.
Next question that's coming from Julie Mountfield, which is how many hours do you think from start to finish? So when we're talking start to finish, we're saying from when you have that first conversation with a vendor, conversation with an estate agent, all the way through to when the keys are in your hand. How many hours per deal do you think you have to put in, and how is that sort of broken up?
Yeah, I mean, if it's through an estate agent or an insolvency practitioner, there's no question, because there's no discussion with the seller. The deal's already on the market. If you're going direct to distressed seller, it can be anything from a day to several days to a few weeks. Sometimes owners are facing repossession the next day. They'll come to us and we'll do it within 12 hours.
Amazing. So you will have processes in place that you can just draw on just to be able to do whatever they need to do effectively to get to the point where they can help, well, you help them, they help you.
Yeah, exactly. I mean, we use the same solicitor, so all the people, surveyors, etc. It's the same team.
So it's important to get a power team around you.
Absolutely.
And understand the local area, understand your processes. So for anyone that's sort of getting into this, that's a real good first port of call. Yeah, I mean,
you purchase a property, you know, it may not be sound, so we get someone in, a surveyor in to check it out before we actually, you know, purchase it. So yeah, definitely we use the same team over and over again.
Good, okay. And from James Long, I like this one because I think this is actually probably the most important question, which is how do you identify if a seller is firstly motivated, and what makes them say, do you know what, I don't care what the market value of my property is, I'm happy to sell it on the cheap because I need some money. Are there any sort of telltale signs when you speak to somebody for the first time, you say, I think I've got an opportunity here? And what we're not saying that we're trying to scam people, what we're saying is we've found an opportunity to help somebody. What are those telltale signs?
I think the point that they've approached us in the first place means they are pretty motivated. You can just tell. I think just
bit of sweat on the brow.
Yeah, well, just, personal reaction. You can tell how eager, how desperate they are. And you know, hey, not all deals work out.
Yeah.
You know, we do about 10,000 leaflet drops of this a month. Some deals, you know, some months we get a lot of deals through, but they don't all go through.
Exactly.
So
okay. So from your point of view, if you're giving advice to people that are just starting out, it's probably, well, I suppose it's a mixture, isn't it? It's the planning that they're doing at the same time, the taking the action, the planning of saying, you know, what do you need to do? So for if they were copying, your sort of strategy would be to get the right people around you, you know, get your strategy in place for, you know, making sure that you know all the relevant agents and that you're speaking to them regularly, understanding the area, but also, you know, putting together leaflets as you have and a strategy of which roads you want to be dropping those along as well, and then of course then take action and actually do those things.
Yeah,
is what you would say.
I totally agree. I mean, what I'm doing is not rocket science. It's just you know, tried and tested below market value sourcing and repackaging.
Yeah,
it's just that, you know, I'm making the effort to do it. I think now, especially in the media, there's a lot of worry mongering regarding Brexit and affordability. But there is other ways. You know, there's a lot of properties I purchase. It's not my own funds. You know, I borrowed and I remortgage. But I think definitely now is the time to invest, and I think Manchester is the place to invest.
Good. Well, thanks so much for spending your morning with me, and it's great insight for everyone watching. Tell us how they can get in touch with you and follow you on social media and everything. Yeah,
so we've got a website, www.propertyforfinancialfreedom.com. We're on social media, Property for Financial Freedom. You can see on the website, you can see some case studies of how we've, you know, done some good investor deals. You can contact me. My mobile phone number's there, my email is there. And hey, you know, we do a lot of mentoring as well. If you don't want to purchase, it's not a hard sale. If you just want to get in touch and, you know, you need some advice with funding, with bridge loans, you need advice with, you know, a property, you know, please contact us.
Good. And obviously that goes for me as well. So mate, if you like the video, please click like, subscribe to my channel. and you can find me on Facebook by searching Sam Norris Property, and of course on Facebook the group Six Figure Journey, which I know a lot of you are following already, and where I've got a lot of these questions from. So thanks very much for watching, and we'll see you again soon.